Good morning, students. In today's class, we will learn one more problem on single entry system. The problem goes as follows. Sonia does not keep proper books of accounts. The following information is given to you. We are required to prepare statement of affairs, profit and loss account, and redraft the statement. So you are having the particulars, you are having the opening balances, and you are having the closing balances. So the assets and liabilities are given here. Cash 6,000 and 24,000, bank overdraft 30,000 and nil, stock 50,000 and 80,000, creditors 26,000 and 40,000, debtors 60,000 and 1,40,000, bills payable 6,000 and 12,000, furniture 40,000 and 40,000, bills receivable 8,000 and 28,000, machinery 50,000 and 50,000, investments is 30,000 and 80,000. So this is the list of assets and liabilities that Messrs. Sonia are having. So we'll just go through once more the assets and liabilities. Now from this we have to prepare only the opening statement of affairs to know opening balance and closing balance. The problem further states that Sonia has withdrawn rupees 10,000 for personal use and had introduced fresh capital during the year for rupees 2 lakhs. Bad debts rupees 2,000 and additional provision has to be prepared at 5% on debtors. There was outstanding salary for 2,400 rupees. Interest during the year on investments is earned but it is not yet received. Then depreciation and machinery have to be depreciated at 10% each. Now this is the adjustments which have to be considered at the time of preparing statement of profit or loss. So how these adjustments are going to be made? We are having first is drawings. So whenever drawings are there in statement of profit and loss account, it is to be added to closing stock and the same amount has to be reduced in revised statement from the opening capital. Next is debtors and PBD. Both are expenses or charge on profits. So whenever expenses or charges on profit are done, such expenses and charges have to be treated as expenses and is to be reduced from the gross profit. And the same amount which is adjusted in profit and loss account is to be deducted from debtors account. Next, outstanding salary. Outstanding is salary of the current year which is not yet paid. So such liability is to be deducted as it reduces the profit and also show it on the liability side because it is unpaid expenses. Next we are having is outstanding interest. Outstanding interest is income earned for the current year, increasing the profit, so it is added to income and also it is an asset because it increases the investment value. Last is depreciation. Depreciation is the expense reduction or permanent fall in the asset because of wear and tear. So deducted from profit and loss statement and the same amount has to be deducted from the respective asset. So go through these adjustments. Remember students, all adjustments whether it is single entry or double entry system, they have to be appearing twice in the statement, in the statements. Oh, shall I repeat? Yes, now we'll go back to our first slide, that is the statement of affairs. To prepare the statement of affairs, the investment information which is given on the first slide will be taken. So you're having bank overdraft, opening balance is 30,000, creditors you're having 26,000 and 40,000. Next, bills payable is 6,000 and 12,000. Next, coming to my cash account. Cash account, you're having opening balance 6. At the end of the year, it is 24. Stock is 50,000 and 80,000. Debtors 60,000, 1,40,000. Furniture 40,000 and 40,000. Bills receivable is 8,000 and 28,000. Machinery is 50,000 and 50,000. Investment is 30,000 and 80,000. Always total the asset side first. So the opening balance gives me 2,44,000, whereas closing total is 4,42,000. Write the same total on the liability side. Now from the respective totals, deduct the amounts from opening column, and from the closing balance sheet or the closing date, deduct the amount. So from 2,44,000, if I deduct 30,000, 26,000 and 6,000, there is a difference of 1,82,000, which is treated as opening capital. Similarly, from 4,42,000, if I reduce 40,000 and 12,000, I will get 3,90,000. This is my closing capital. So now the difference between my assets and liabilities will give me the opening and the closing capitals. Now the next one is for preparation of statement of profit or loss. So whenever statement of profit or loss is prepared, always we have to start with the closing capital as our base. So our closing capital is 3,90,000. Now drawings made during the year, that is adjustment number 1, it is 10,000. So 3,90,000 plus 10 together gives me 4 lakhs. Now out of this 4 lakhs, there was additional capital introduced by Sonia. That additional capital was round about 2 lakhs. So from 4 lakhs, I have to minus 2 lakhs. Now I will get my adjusted closing capital, which amounts to 2 lakhs. So if my closing capital was actually 2 lakhs and if my opening capital is 1,82,000, the difference will be giving me my gross profit or loss. So I'll repeat, closing capital 3,90,000 plus drawings 10,000. We add drawings because if this drawings was not made, my capital would have been 4 lakhs. That's why drawings are added. Next, I have to reduce my opening additional capital. Additional capital 2 lakhs, if I reduce from 4 lakh, I'll get 2 lakhs. From 2 lakhs, the opening capital fund from the statement of affairs is to be deducted. The trading or gross results will be profit, which amounts to 18,000. Now from this 18,000, I have to reduce the expenses and add incomes earned. So what are the expenses? Bad debts already calculated, 2 lakhs. Now provision for doubtful debts. Now from the total debtors, I will minus 2,000 and on that 6,900 from that will be deducted. So 2,000 minus 6,900. Then I have outstanding salary 2,400. Furniture is 4,000. Depreciation on machinery is 5,000. Total expenses amount to 20,300. So I repeat, all expenses have to be deducted. So total debtors is 2,000. Then provision is given. So first deduct 2,000. After deducting 2,000, whatever is the balance, on that balance I will remove at the given percentage to make the provision. So provision amounts to 6,900. Next, outstanding salary already calculated, 2,400. Then depreciation and the depreciation on furniture and machinery is 10%. So 10% of 40,000, 4,000, 10% of 50,000 is 5,000. Now the total of all expenses is to be taken into consideration. Total will be 20,300. Now during the year already outstanding interest was existed. That is adjustment number 3 or 4. So that was not taken into consideration. So it's a income. So all incomes have to be added. So interest on investment amounted to 8,000, which has to be added. So the total gives me 28,700. It gives me 28,007. Sorry, after deducting 20,300, I will get the answer. From that to that I will add. So the difference of net profit will be 5,700. Here we have not taken the total. So from 18,000 gross profit, my additional loss is there. So from that loss there will be around about 2,000 something loss will be increased. So from my interest on investments, from 8,000 I should take the difference. So whatever is the difference will be added. So in short we can take like this: 18,000 plus 8,000 gives me 36,000. From 36,000 I should minus 20,300. So I will get 5,700 as my net profit. Now the last one we are going to prepare is statement of the revised statement of affairs or redrafted statement of affairs. So what it is? Creditors. We will take only the closing balance when we are preparing the revised statement, because it is prepared on the last date and it incorporates all the adjustments in the statement. So we'll take only the closing balances with the adjustments, except capital. Capital will be taken as the opening balance, because only we start with opening balance in for capital. So we'll see what are the closing liabilities. Creditors we had 40,000, bills payable was 12,000, bank overdraft was not existing. Now coming to the opening capital. So opening capital was given in the opening statement of affairs 1,40,000. To this I have to add 5,700. So I told 36,000 minus 20,300 gives me 5,700. Then I should add the additional capital of 2 lakhs. So the resultant total capital or adjusted opening capital will be 3,87,000. From this I have to reduce the amount of drawings made during the year, which gives me 3,77,000. Now I have outstanding liability, that is adjustment 3, which amounts to 2,400. Now coming to the asset side. So on the asset side, all closing assets have to be taken into consideration. Cash is 24,000, stock amounts to 80,000. Now coming to debtors, total debtors were 1,40,000. From that I minused 2,000, I will get 1,38,000. So on 1,38,000 I should just take the percentage of provision for doubtful debts, which amounts to 6,900. So my total debtors will be 1,31,100. So I repeat, 1,40,000 minus bad debts, 2,000 minus provision for doubtful debts, 6,900. Whatever is the resultant figure given in the outside column is treated as the good debts for the year. Next I have is furniture. Furniture is 40, depreciation is 4,000, it amounts to 36. I have machinery 50,000, depreciation on machinery amounts to 5,000, it is 45,000. Next I have bills receivable amounting to 28,000. Next interest on investment is 8,000 and investments are amounting to 80,000. So now from this we have prepared the revised statement by filling in all the expenses, assets, liabilities and the adjustments. So we'll just go through the adjustments. Adjustments are with opening capital. We have to add net profit and the trading, this additional capital and drawings. So once it was taken in profit and loss, second time repeated in my revised statement. Similarly, adjustment is with the debtors. So first good debts or book debts minus bad debts minus provisions. If discount on debtors is given, that also has to be reduced, but here we don't have. So the two items have to be reduced. Whatever is the resultant figure will be treated as good debts. Next, you're having fixed assets, furniture and depreciation is to be reduced. Similarly, machinery and depreciation from the respective assets have to be reduced. So it will come to 36,000 and 45,000. So the second entry will be in the respective assets, whereas in the first entry of depreciation will be shown as a deduction as of expense in profit and loss statement. Next, you are having bills receivable as it is from the closing balance from the statement of affairs. Investment 80,000 as it is given in the statement of affairs. Outstanding interest on investment. This is the last this adjustments which is amounting to 8,000. So it is added in profit and loss. Now it is shown as a asset on the asset side. Now total my asset side and the liability side. So both my total assets and liabilities should give me the same total of 4,32,100 and 4,32,100. If assets and liabilities give the same total, it shows that my statement of affairs is correct and there are no mistakes in the problem. I hope it is clear. In the next class, we'll see for some more problems. Till then, be safe and take care. Thank you.